This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what I'd like to do today is discuss the ABC corrective pattern and how it relates to a pullback and a longer-term uptrend. Now, I think as I do more and more of these videos, it can help make sense to what I've written in the book and through the courses and how it can be applied. It's a little bit different each time. That's what makes trading a little bit more difficult. Now, if you want to learn more about some of these techniques, I would suggest starting with the book. It is at rabilstockresearch.com/book. You can get more information there. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, first example I want to use today is Baker Hughes, BKR, and I've just got the weekly and the daily. I've got the weekly up on the left, okay, and a daily on the right. Now, I want to show a couple different ways the shorter term time frame daily can play out in terms of this ABC reversal. All right, now one of the keys to understanding how to trade in two time frames. All right, we're just looking at two pattern. We're not going to the upper time frame. We're not going to go down to a smaller time frame. We're just going to use these two together. And if you learn this approach, you're going to understand from time to time. You might miss a pattern or two depending on the style of entry you want to use. All right. Now, but the key to this, the overall key to this is understanding that what we're trying to do is understand that the smaller time frame daily is only helping us get in this time frame. We are trying to get in this signal here. This breakout and pullback, we're trying to get in. Now, what we're attempting to do is improve our timing and lower our risk by using the smaller time frame. Okay? Now, every now and again, we might, by trying to fine-tune the entry pattern, we might miss. All right. And one of the things I say and tell my subscribers is that if you don't want to miss this pullback, all right, you're looking at this chart and you don't want to miss this pullback, then you can always trade off this time frame. You don't have to go down to the smaller time frame, or you can use a strategy that I have said, which is if we get an opposing trend pattern, I back tested this, when the 18 crosses down below the 40 and price closes below both. So at this right here, the 18 crossed down below the 40 and we close below both lines. Once that happens, we are set up. The trigger comes when we cross back above the 40. All right, so that is a fail-safe. Now, what I teach in my courses and give a lot more detail to is that, yeah, we like what we're seeing here. We got a pinch play. We've got really good momentum. We're pulling back to support. I get an ABC correction. This is a move down. We didn't make a lower low. We just moved down. And then we made a lower high and a lower low. So we've made one single lower low. This is the A, okay? This is the B, and this is the C. All right, that's the ABC. Now, when that happens, I'm always going to draw a trend line in. Okay, now, when that takes place, I'm drawing in the trend line and I'm trying to figure out, in fact, the correct trend line would actually be drawn like this because we want to connect it to this pivotal area here. This is the anchor for the trend line, this lower high. So I want to, you tilt it up. You don't want to pass through prices. If you started from here, you'd have to pass through this peak here. So we started from here and we work our way down. All right, now we're more in line with the 18. You see how they're parallel and they're not, there's a pretty close proximity in price as well. Now, what I try and teach is if we look at this ABC decline and I see overrun of the zero line and I see a little bit of selling pressure, then I'm looking for the second entry, not necessarily the first, meaning I'm not necessarily going to take this first cross. I'm going to look for some kind of a pullback or test or something like that. In this situation, you would have missed the signal. Okay, it would not, unless you've used the fail-safe, you would have missed it. All right. Now, I've said this over and over again. That is the risk of the approach. The approach is trying to prevent losses. It's not trying to get into every single signal. All right. Now, if you're going to take every signal, then you kind of have to use the fail-safe. All right. Now, I don't use that myself. I'm willing to accept that sometimes they'll get away. Now, I will say this. There's a couple things that I would tell you. If the upper time frame, the time frame that you're trying to get in, looks perfect, is absolutely perfect, has outstanding look to both the MACD, the ADX, the overall pattern, it's pulling back to support, and it's one of the strongest stocks in a sector that's been oversold, and now the sector starts to turn up. Well, yeah, you're probably not going to get a pullback in something like that because this is too perfect, and it's one of the only stocks that didn't break down in energy. All right, so you have to factor in a couple of other things sometimes. The approach by itself is there to protect you. I've given in a lot of detail. If you go through the courses, I mean, there's a significant amount of detail that takes place here. And again, I'm trying to create a situation where when we see certain things taking place with the ADX and the MACD on the lower time frame, it can save us from getting whipped out of trades and everything. But it also increases the chances that you might miss. All right, so we want to be aware of that. So that's sort of step one. But again, we're always the understanding is we are trying to buy this. This is what we're trying to get in. We like what we see on this time frame, so we want to enter. All right. Now, if we use the lower time frame, I would say 8 or 9 times out of 10, it's going to help. But every now and again, I mean, this might happen 1 out of 10 times, but you might miss. All right. All right. Let's look at a different example. And this is one where we have, again, the difference between a simple pullback on the higher time frame, where we just have one single leg down. And I would suggest, as I was talking about with Baker, you see how this was a single pullback? We know that because we have the zigzag up. Now, you can do it yourself using pivotal highs and lows if you want. I mean, if you want to do it that way, that's not a problem. I would suggest, as you're starting out with this approach, is to use the zigzag. Now, you might not have it on your chart. You might have it on a separate chart or have a backup chart or something like that so that you can see what the zigzag is telling you. And then if you don't want to have it up there all the time, that's fine too. But I would suggest having it up at the beginning when you're learning. And the reason is that it's going to take away some of the potential question marks you might have. Is this is clearly a simple pullback, but what is actually taking place here? Is this a lower high, lower low, lower high, lower low? Is this a really complex pattern, or is this just an ABC? This is an ABC, all right? This is the A, this is the B, and this is the C. Now, yeah, I know it didn't go to a lower low, but you have to understand we zig down, we zig back up, and then we zig back down. Once you understand this, then I think the ABC corrective pattern you can recognize it can come in any number of ways. Now, we had overrun here as well, but look at the way this played out. It went into the zone and then came out, created the extra zig for us. Now we know coming back up through 130 is essentially our signal. Now, there's a couple other ways that this could play out. So if this is strong enough where it pulls back to the 18 and it forms a pinch, then we can take the pinch play entry. All right, we don't have to wait for it to come back above. But in this case, it went back up and it came out of the zone to the downside, rebroke the 18, rebroke the MACD. All right, and then once that happens, then I know I'm looking to get back in, coming back up through this 130 level. All right, so we want to so again, we're trying to buy this here. Notice how there was overrun this time. Okay, this looked really good, but we had overrun. So again, what I try and teach there is to look for a second entry when that happens. And in this case, we got that second entry after the pullback. All right, so you got to take these things into account, but you also have to accept that if you're going to use my approach, that there will be times where you will miss a trade or two. All right, but it will be fewer and farther between. I wouldn't expect it to happen every other time, right? I think it might be 1 out of 10, maybe even 1 out of 20, where you get a situation where it just runs away without you. If you lean on what's happening in the MACD and ADX, on balance, it's going to help you and it's going to improve your numbers. All right, so that's the goal. That's what we're trying to accomplish with this whole approach. I hope this helps. Let me know if you have any questions. Thanks.